The time has come to start the meeting for institutional investors and financial analysts on Q1 fiscal year 2018 earnings for Hitachi Limited. I would like to first of all introduce the speakers to you. Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. Mr. Tomomi Kato, General Manager, Financial Strategy Division. Yasuo Hirano, Executive General Manager, Corporate Brand and Communications Division. The outline will be explained by Mr. Nishiyama. Please refer to the PowerPoint presentation for my explanation. Starting off with page 5. Or 1-2. This is a summary profit and loss statement. The top we have revenues from April to June is the first quarter at 2,165.8 billion yen. This is an increase of 4% year-over-year. Social infrastructure as well as high functional materials and information telecommunications systems have improved. Now, EBIT was 180.4 billion, increased by 37.1 billion yen, or 12% increase year-on-year. Information telecommunication as well as social infrastructure, industrial system, and construction machinery contributed. EBIT ratio was 6.8%, and it is an improvement of 0.5 percentage point. EBIT was 180.4 billion, increased by 37.1 billion. Hitachi Kokusai Electric is included in terms of 32 billion yen. At the very bottom is net income attributable to Hitachi Limited, 5.2 billion, increased by 30.1% or increased by 40% year-on-year. Now, in terms of operating income, EBIT and operating income, EBIT and net income was the highest ever for the first quarter. 1-3 is the waterfall chart for factors affecting changes in revenues and adjusted operating income. Left-hand side is revenues. Hitachi Kokusai Electric reorganization impact was minus 20 billion yen. Foreign exchange impact was positive 9 billion yen. So against the dollar, yen was weaker, but for renminbi, yen was stronger. So as a result, the foreign exchange impact was positive 9 billion, and business scale expansion was positive 88.2 billion yen. Adjusted operating income, impact of reorganization of Hitachi Kokusai Electric was impact of minus 2 billion. Foreign exchange impact was positive 1 billion yen. Profitability improvement was 17.3 billion. 1-4 is the revenues by market. The right-hand side is year-over-year comparison. Japan was increased by 1%. Outside Japan, increased by 6%. Now, looking at the ratio, for outside Japan was 55%. By region, China 5%, ASEAN, India, and other areas 7%, North America 4%, Europe 14%. Year-over-year increase was recorded for all regions. Main factors from China was construction machinery, buildings, and Sal-Air acquisition, and Sal-Air China business had an increase in industrial products. And and ASEAN India, Hitachi High-Tech, as well as Hitachi Chemicals and construction machinery improved. North America, acquisition of Solia made the construction machinery as well as railway systems increased. Europe, railway system as well as construction machinery increased. 1-5 is the balance sheet and cash flow summary. Very top is total assets, 9,934.5 billion yen. Compared to previous term, minus 172 billion. CCC, cash conversion cycle, was 60.4 days. Decreased by 9.3 days from the previous term. Receivables as well as prepayment has improved. As a result, stockholders' equity ratio was 33.8%. D ratio was 0.27 times. Lower table is the cash flows. Cash flows from operating activities, 134.3 billion yen. Cash flows from investing activities, minus 103.9 billion yen. Free cash flow, 30.4 billion yen, which is an increase of 8.1 billion yen year-over-year.
Next, 1-6 and onward. For 3 pages, this shows the revenues, adjusted operating income, and EBIT by business segment. First, Information Telecommunications Systems. The communication network equipment subsidiary Alexa Networks stock was transferred. So that was one impact that pushed down the revenue, but the system integration business in Japan expanded. So the revenue overall was up 1% year-over-year. Adjusted operating income was 7.4 billion yen increase year-over-year. The system integration business profitability improved in Japan, and IT platform and products business profitability improved. So income improved. Social infrastructure and industrial systems revenue was up by 8% year-over-year, and the big factor was the increase in the revenues of railway system business for Europe and the increase in revenue of industrial products business due to the acquisition of Solia. And with that, adjusted operating income increased by 7.5 billion yen. The sales price in elevators and escalator business in China decreased. So this was a negative factor. But the other power and energy business and industry and distribution field profitability improved. So the adjusted operating income increased. Next, slide 1-7. Electronic systems and equipment. Hitachi High Technologies clinical analyzers sales increased, and the diagnostic imaging equipment and healthcare business sales increased. Those were the positive factors, but Hitachi Kokusai Electric was deconsolidated, and this was an impact of 20 billion yen. So the revenue went down by 2%. Adjusted operating income is down by 200 million yen. This is because of the 2 billion yen impact from the deconsolidation of Hitachi Kokusai Electric. Other than that, Hitachi High Technologies and healthcare business both increased in revenues. Next is construction machinery. In all regions, revenues increased, especially in Asia, Australia, North America, and China. The sales increased. The sales in Australia, the ratio breakdown is 17%, and so this is higher than US or Japan or China. And adjusted operating income is up by 10.7 billion yen with the increase in revenues. Next page, please. 1-8, high functional materials and components. Revenues is up by 9% year over year. This is thanks to Thai storage battery acquisition by Hitachi Chemical and Santoku rare earth metal manufacturer by Hitachi Metals, and the increase in sales price linked to higher raw material costs at Hitachi Metals. So all in all, 9% increase in revenues. Adjusted operating income was down by 3.6 billion yen, and the reasons were the change in product mix at Hitachi Chemical and the effects of changes in raw material costs at Hitachi Metals. Next is Automotive Systems. The sales decreased in North America and Japan, and Clarion car information system sales decreased, and therefore revenues were down by 2% year over year. Adjusted operating income, due to the decrease in revenues and due to the deterioration in profitability in North America and the delay in the profitability improvement and the increase of development investment, it was down by 5.1 billion yen. Next, 1-9, Smart Life and Eco-Friendly Systems. Revenues is down 87% year over year. One is due to the change of the accounting to net basis revenue for part of procured products in Japan, and the sales decreased in home appliances in Asia. On the other hand, the adjusted operating income, thanks to the cost reduction and the structural reform, we were able to achieve 500 million yen increase year over year. And lastly, corporate items and eliminations. EBIT is plus 35.5 billion yen year on year. Hitachi Kokusai Electric gained by selling Hitachi Kokusai Electric stock, that was 32 billion. Automotive Systems and the high functional materials and components, these products segment revenues were down year over year. But information telecommunication systems and social infrastructure and industrial systems, profitability continue improving, and the construction machinery demand is strong. So overall, we were able to achieve higher profit. Next, 1-10 is topics. First is the progress of LaMotta Business. LaMotta Business first quarter revenues was 223 billion yen, and this was 9% increase year over year. In LaMotta Core Business increased. In the information telecommunication system segment and the social infrastructure industrial systems, with the growth there, we were able to see 47% increase, and we will expand this further. The first quarter trends are as follows. In the industrial area, we are expanding the LaMotta Solution Core in industrial business field. There are two examples listed here. One is the utilization of the high efficiency production model. We established this in Omika Works in 2016 and have been providing it as LaMotta Solution Core since last year. High efficiency production model. We started a collaborative creation with Amada, a company manufacturing sheet metal processing machines, to optimize the value chain. And we are also developing our maintenance and repairing service using AI. We are developing this service platform to automatically propose optimal repairs for industrial machinery. We are conducting a demonstrative test at U.S. subsidiary Sol Air, aiming to develop as a solution core and then provide this to our clients as well going forward. We also started strengthening IoT communication platform to create new value, such as remote monitoring. KDDI's global communication platform and LaMotta are now collaborating, and as part one, we are conducting trial implementation of KDDI's global communication platform to industrial inkjet printers manufactured by Hitachi Industrial Equipment Systems. So industrial, business field, and remote monitoring, in these areas we will continue offering value-added services. Next page, global business expansion. 2 examples here. One is the reinforcement of cloud business. Hitachi Vantara announced the acquisition of a U.S. company called Ring Cloud, and this was signed in June, and we will complete this acquisition by December this year. Cloud service and migration service are provided by this company. It's a public cloud service provider, AWS, Azure certified, and big data analysis, IoT, machine learnings are utilized in their solutions. By acquiring this company, we are able to add public cloud to our private cloud and hybrid cloud and offer a broad-based cloud service going forward. Next, our expansion of IT solutions business in Europe. Hitachi Solutions Europe acquired Implexis, a German company, and the acquisition was completed on July 2nd. LS Dynamics business will be reinforced with this acquisition. Both cases are smaller scale. Ring Cloud sales revenue is around 5 billion a year, and Implexis around 3 to 4 billion yen a year. So the size is not large, but the cloud service and solution business, they serve as the important component, and they will complement our business, and they will contribute to the growth of LaMotta Business going forward. LaMotta Business and social innovation business, global front capability and delivery capability measures will continue going forward. Next is progress of important projects. 2 case examples here. One is the deconsolidation of Hitachi Kokusai Electric. This is completed. And the Horizon project in the UK, and this is the nuclear project. From the UK government, they announced on June 5th that we will start the formal negotiation. This investment decision discussion will continue.
Slide 2-1, which is the outlook for the full year. And the first quarter was strong. But in terms of the forecast for the full year will remain unchanged. In terms of segment, we have not changed the previous forecast. Second quarter, foreign exchange assumption is 105 yen for the dollar and 130 yen for the euro. This will remain unchanged, and that is all in terms of my explanation. We would now like to go into the Q&A session. And please state your name and affiliation and wait for the microphone to be brought to you. The floor is now open for questions. Question. Now, first quarter results have been explained. The actual has remained very strong. Compared to the internal plan, how did it compare for the first quarter? And page 9 and onward, you have talked about the segments and details were presented. But how did it compare against the plan? Now, compared to plan, the quarter-by-quarter comparison is difficult to do because there are projects, percentage of completion basis must be considered. Cost incurred timing will differ from transaction to transaction. And therefore, it is difficult to have a clear-cut comparison in that regard. But in terms of macroeconomic basis, revenues, was better than the plan by 30 billion yen. Operating income better by 5 billion yen. Deterioration against plan was seen in the automotive system. Around 3 billion yen deterioration was the actual. But other than that is 8 billion. So total is 5 billion on a net basis. Improvement was made against plan for information telecommunication systems, social infrastructure and industrial system, as well as construction machinery. Question. If possible, please talk about the domestic nuclear power plant. There seems to be a decline. What is the outlook going forward? Also talk about the update on the Horizon project as well, please. Regarding the Horizon project, will not have impact on revenues or profit here. But the project-related expenses remains unchanged on a monthly basis. And in terms of Horizon project, there is nothing having a significant impact on the P&L. Last fiscal year, project that existed disappeared for this fiscal year. So overall, it is proceeding according to plan. Now, question: Horizon will depend on the discussions with the UK government. Compared to the past, it seems that you are going to make your decision based on the price. But in terms of Horizon project in the mid to long term, what is your current strategy? Please update us on the Horizon project. Now, in terms of the Horizon project, we are in discussions with the UK government. It has been announced that we will go into formal discussions. So discussions are underway today. Our stance remains unchanged. We will have to make a decision on whether we will proceed with the project. We need to come up with the decision. However, I cannot give you details. But as we have mentioned in the past, we have to make sure that the requirements are met. There are many factors to be considered, and we shall evaluate them in detail. But regarding the progress made in discussions to date cannot be divulged.
Any other question? Question. I have two questions. First is information and telecommunication systems. So this was an upside from your internal target. Now, adjusted operating income positive factor is the improvement in the system integration profitability in Japan and IT platform. Could you elaborate on this? Which part improved in particular? And is this a one-off, or is this something that is more continuous on a full-year basis? That's my first question. Answer. System integration, project management, project management, we have a making effort to do a thorough project management to avoid cost increase. So big loss making or project cost deterioration that deviates from the plan were avoided, and we've been making this effort. Our effort for project management has been bearing fruit, and that is leading to this improved profitability in our SI business. In platform and products, we've done drastic structural reform, and this positive impact is continuing. Thank you very much. Question. So platform, the flash storage, it's not just this area, but you're seeing a strength overall? Answer. IT platform and products. A big factor is the domestic system integration, profitability improvement. IT platform and products, we've done a structural reform and starting to see positive impact from that too. Question. My second question is about Horizon project. So I have 3 small questions. The detailed negotiation cannot be disclosed, and I understand that. But our concern is, as you see in the media coverage, the Japanese government and UK government and Hitachi will be the main party, and we have still some concerns. Is the negotiation with the private sector companies underway? Is it progressing? And are there any negotiations with the potential participation from other companies? And in 2019, you will make the final investment decision. So I want to confirm the schedule again. And third point, if for some reason this project is canceled or discontinued, the withdrawal cost, what will the withdrawal cost look like? Answer. Regarding Horizon project, the important business continuity decision has not changed. So this will be based on Hitachi's the model of taking this off balance. So that's one big factor. And second, the return, the optimal or appropriate return as the private sector company, and the investment scope that is acceptable for us. So these 3 are the points that we have raised from the past. We will see from these perspectives, 3 perspectives, and judge make our decision. Now, how much impact will there be if we stop today, hypothetically? It will be 270 billion yen Horizon-related asset. So that is the level of asset we have. But this is only hypothetical. So our first priority is to have this negotiation and to conduct the work necessary for the decision. And the timing will be 2019, fiscal year 2019. So we will make a decision by then. Question. So making a decision in fiscal year 2019? Answer, yes.
Question. I have many questions. Actually, I have 4. First of all, regarding trade war, implications for automobile, foreign exchange, as well as solar and others could be impacted. I'm sure you are conducting simulations. What reasons will lead to impact? Can you extract the factors you are contemplating? The second question is regarding the automotive system business. For 2 years, profit has been declining. First quarter is also profit decline. Revenue is flat. This is the same for Mitsubishi as well. So what is occurring in this area? The next one is regarding South Africa. 770 billion invoice has been presented. What is the progress made so far? Fourth point is regarding nuclear power. In the beginning of June, MHI Miyanaga president said the PWR and BWR are different, but he said that consolidation is difficult in Japan because of the difference. MHI and Hitachi, is there a possibility, and Toshiba, is there a possibility of a partnership? Can you talk about this possibility? Answer. First of all, regarding the question on trade war, direct impact will be in the area of tariff. It is receiving much attention. The additional tariff from the United States and retaliatory action by China. The direct impact from these are limited because in China, we have a company established and exporting to U.S. And there is also U.S. produced products for export into China. But the scale thereof is not large. U.S. entity procuring from China in terms of materials, even if we include this scope, I don't think the impact will be large because we are promoting local production for local consumption. So direct impact is limited. However, it could have a negative impact on the overall economy. This is something that is difficult to quantify. At any rate, the direct impact and wide area impact will be avoided through local consumption, local production for local consumption. And we will continue our policy of providing best solutions for our customers. This will remain unchanged. Regarding foreign exchange, this is also difficult to talk about. But for fiscal year 2018, the assumption is 105 yen to the dollar. So there is a certain hedge in place. The most significant impact on revenues from trade war is dampening the overall economy. That is the most significant. Now, for the automotive systems, let me explain what is occurring in this business. In North America, for our customers, the demand is declining, having an impact on revenue. Furthermore, for the automotive system, as well as for Clarion, there is a year-on-year decline. Revenue is deteriorating. This is having an impact. On the other hand, productivity improvement is being delayed. From last year, we have started to implement measures to improve productivity. A special team has been established to improve productivity. However, the improvement has not been brought to bear according to plan. These are the major factors behind the automotive system business. Now, regarding the discussions regarding South Africa, we are following the arbitration procedures. Some time has passed since this has transpired. However, I cannot disclose information on these discussions, so I shall refrain from making comments. Question. What about ESCOM? The consolidation of the nuclear power business domestically was also raised as a question. The nuclear power business cannot is not a business that you can enter or exit easily. And inclusive of the decommissioning of the nuclear power plants that have been suspended is an area that is very difficult for one company to manage on its own. So working with other partners is one option open to us. However, I shall refrain from making any detailed comments on this. Now, according to the ESCOM material, South Africa project is being front-loaded somewhat. Are there any progress made for the projects that you are contemplating? What are the risks? In terms of progress, it's about 80 to 90%. Overall, there are 12 units power generation plant. And in terms of progress made, in terms of construction, is to the level of 80 to 90%. So it is nearing completion. However, more time will be required for completion. This will continue to be discussed in the process of arbitration, so I shall refrain from making detailed comments on this matter. Now, I would like to supplement some information as well. UK nuclear power plant FID was made. We are considering calendar year of 2019 for FID to be made. So it's within a calendar year 2019 that FID will be made.
Question. I have 3 questions. First, overseas sales, overseas revenue, information and telecommunications is 90%. And what is the breakdown? What is the detail here? And on the same page, Asia was weak in smart life and eco-friendly systems. So if you could elaborate on the reasons, please. That's my first question. Second question is very detailed numbers. In the social infrastructure industrial systems, the adjusted operating income and EBIT. Between these two, as we saw in the newspaper, these two are now becoming very close. So foreign exchange, factor, and others. So are there any large factors in this others? So if you could elaborate, please. Third question is in automotive. So you said there is a delay. How much can you recover? What is the timeline for your recovery? So will you be able to recover with based on what you are doing now, or could you elaborate? Answer. First question is the overseas revenue. Yes, 90% in information and telecommunications. So information telecommunications and overseas, one is high-end storage, decrease in high-end storage. On a year-on-year basis, high-end storage decreased. from mid-range storage that we launched in May, will help us recover the scale. And in Hitachi Vantara, they are promoting transformation. Not just storage sales, but will also promote solutions. And this will help us improve fixed cost. The reason the revenue declined was the decline in high-end storage. So this hardware side in the information telecommunication system, we have this factor, but the mid-range will be launched, and the overall system solutions will also be a contributing factor. So we think we can recover. Now on the non-operating items, yes, non-operating factors. Roughly speaking, the business reorganization, so this is overall a positive 32.3 billion yen. So business reorganization profit and loss, that's 37.4 billion plus, and business restructuring minus 3.8 billion, and equity method 11 billion, and others. And third question, Automotive Systems. Our outlook going forward is as follows. Revenue decline, and the delay in the improvement in productivity are still underway, and we think this will continue in the second quarter. Similar trend will continue in the second quarter. However, the gap is large, so we need to scrutinize and see if we can recover in the second half. And on a full year basis, the situation is weakening, but the electrification and autonomous driving investment and R&D are also promoted aggressively, and that is also generating this gap from last year. So in the second quarter, we will watch again and see how much we have achieved. Question, smart life and eco-friendly. Thailand is decreasing. Which products? Air conditioner? I'm sorry, I would like to refrain from that. Thailand, refrigerator, washing machine. Japan is hot, but Thailand is cool this summer. So sales is down on a year-on-year basis. Thank you very much.
Question. I have 3 questions. First question is a simple one. Regarding equity method, profitability is low. How is this making a contribution overall? That's my first question. Second question. Regarding the industry distribution business unit, for the period that ended, orders was increasing by 10% or so, 10% plus year on year. But this is not leading to increase in revenues. Why is this the case? No, from orders received to posting sales, is that the issue, or is there a negative order received having unfavorable impact? With LaMotta, in terms of industry and distribution, the ID business numbers do not seem not to be aligned. So please clarify. Third question is regarding buildings. In the explanation, you said that there is a price competition and therefore profit is declining. But looking at revenues, there is an increase. How can you align these numbers for China? The first quarter orders in terms of number of units as well as in terms of value. Please elaborate further. Answer regarding the equity method, the profitability. The overseas subsidiaries are taking out foreign currency denominated loans, and this is having a negative impact on the equity method profitability. Now, in terms of industry and distribution, the most significant impact, why there is non-alignment in terms of the orders and sales is mainly in the area of railway systems, because revenues are posted for IEP. That is very significant. And this order was received a significant time ago. And on the other hand, and that was based on a longer delivery. Building is also increasing. In terms of the industry and distribution business, Air acquisition has been made. So this is likely to have an impact as well. This is likely to increase. Now, in terms of industry distribution business unit, for this business unit, facility business that was acquired in the past are being narrowed down. On the other hand, short delivery for the Hitachi industrial equipment, that is more in alignment for the Hitachi industrial equipment systems. But for plants, there is narrowing down, and there is also a lag in terms of posting. And digital solution area, revenues are small, but it is mixed in terms of long delivery and short delivery. So orders received in the previous term for the industrial products, it is likely that the sales will be posted in the second half. Buildings revenues are increasing, and it is increasing in terms of volumes as well as value. But the unit price of the order is declining. In terms of structure, the whole industry is similar. The high-story elevators and high-end products are decreasing, and mid-range is our focus. We have reduced cost in some products, which is similar for competitors. However, the unit price is declining in this zone. Profit is declining, even though revenue is increasing in areas where is impacted by the high raw material cost as well as steel products. But the most significant impact is the average unit price declining. That is causing the mismatch between the revenues and earnings.
Question. My first question is on the automotive business. Your forecast, there may be a downward revision risk, but you made upfront investment in the next generation automobile. Many companies are making upfront investments. So when the forecast declines, the companies' profit margin of those companies providing the next generation vehicle components. Do you think we need to think about the risk of the downward revision, or is this just the one-off increase in the upfront investment and you will be able to recover the investment? Second question is LaMotta. The first quarter progress does not seem bad, but against your full year forecast, second, third, and fourth quarter, if you update, do you expect an upside, or do you still think this full year forecast is appropriate? And third question is nuclear. So the total construction cost is 3 trillion yen. And the power purchase price is 1.6 times the market level. So who will shoulder the construction cost and this purchasing price? Is this the key point that you need to watch or manage, or are there any other important points? Please answer. First, regarding the upfront investment in automobile components, the trend is, especially in the electrification and the autonomous driving, we are trying to focus in this area and trying to increase the ratio, not just conventional, but this new area as well. So our investment is increasing. In both electrification and autonomous driving, software and large capex is required in both areas. So we think the upfront investment will be heavy in this business. Will we do this all by ourselves? No, we will collaborate if we think we need to. And one example is our collaboration with Honda in motor. So we will collaborate if we think that is appropriate, instead of developing everything by ourselves. So we will collaborate if necessary, or apply very necessary technology. If we try to do everything by ourselves, we will need to continue making heavy investment for a long time. So we will think carefully. Now, the full year plan of LaMotta. Our current trend, given the trend, the use cases will not be large scale in a short period of time, but we are accumulating good use cases at a good pace. As of the end of June, as of the end of first quarter, the number of use cases is 565. So we will demonstrate these with our clients, conduct POC, and provide the solutions to other clients as well. So we are plowing the seeds right now to lay the foundation. And this foundation is being established as we speak. And we think the pace exceeds the full year plan. It's difficult to quantify, but against our full year plan, our first quarter progress was, our forecast was 20%, but the result is 21%. So 1% overachievement. At this pace, LaMotta's full year revenue may be slightly higher than our plan. Next, nuclear. The criteria for our decision is for a cost, project cost, and the strike price. Those will determine the return on investment. So they are important. Right now we are scrutinizing the estimated cost. And this is one important factor. Strike price. Deciding strike price is one important matter that we are negotiating with the UK government. But before that, one more thing we need to decide is we cannot just hold Horizon 100% forever. So the scheme, the financial structure needs to be considered. We cannot own utility company for 100% forever. So off-balancing is going to be a very important judgment. 3 trillion is not the number that we disclosed. One more additional comment about automobile. The question I wanted to ask you is, with the OEMs and the upstream device manufacturers, the power balance between them, can you exert the capability as much as you think, or not, and you end up shouldering so much development costs and the price will remain unchanged and the profit that you enjoy will be smaller? Is there a change in the power balance like that? That was the background to my question. Are there any changes in power balance, or you're not worried about that? Answer: I'm always worried about that. Software spec is not decided. Same with IT software. Spec is not decided. If we progress without deciding the specification, then in the end, as we experienced in various projects, we may suffer from that. So the way software is structured, the format need to be built thoroughly as we move forward. But unlike parts and components, we utilize our technology and deal with the areas that customers cannot deal with. So we need to have firm commitment and manage the specification. So in other words, software management, project management, and the decision of the spec with our clients are very important.
So we are approaching the time to close the meeting, so I would like to take the last question before we close. Question. I have 3 questions. First question is regarding the Horizon project. I understand that you are negotiating the various conditions, but the 3 conditions of balance sheet, strike price, as well as financing scheme. Out of that, in terms of off-balance sheet aspect, has you reached a consensus amongst the board members that you will not proceed unless it can be taken off the balance sheet? Now, second point is also regarding the Horizon project. In terms of the asset, when the investment was made in 12, it was 670 million pounds. But why is it now 27 billion? 270 billion. Now, regarding automotive system, the profitability has been struggling in the past. But now, with the new CEO, I understand that the strategy is being formulated today. What will be the policy presented? There was no automotive presentation in the IR day. When will the strategy be disclosed to us? Now, answer regarding Horizon, making this equity method entity. I cannot give you details about what we're discussing on the board, but we will not go into construction having a 100% stake. That is not the case. And based on this condition, we will consider the financial structure accordingly. Now, in terms of the breakdown of asset, we are not providing details. There is development as well as engineering work underway. The asset in Horizon, and also there is a design work conducted in Japan for GDA. This is intangible asset, inclusive of everything altogether. Consolidated asset is 270 billion. Question regarding the UK project. If you decide to stop this, will this 270 billion be a loss? Or is there technology that can be reused? So does that mean that that will not be posted as loss? Well, it's a hypothetical question which is difficult to answer. But if we were to stop today, it will be impairment of 270 billion. However, will we stop this without using? We may consider transfer, or it could be a non-cash based transaction. So there are various options available to us. But it is, after all, a hypothetical question. But there is a possibility something of that nature can occur. Now, regarding the strategy of the automotive system, Boris Koch is now considering this business in detail. And during the summer, the strategy should be formulated. And once we have the strategy in place, we will make the information available to you, although we don't know how it will be presented. And we did not do this in the IR day. So CEO Mr. Koch is now analyzing the business. He is in the process of formulating strategy as we speak. Thank you very much. With this, we would like to bring this meeting to a close. Thank you very much for your attendance today.